Hello, hello, hello. So this is 50 pips rocking and rolling. I hope everybody's having an awesome weekend. 14th09/2014. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers here on the website and everywhere else. Understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on, guys? So the first things to say is really keep in mind that this is going to be has the potential to be a very volatile week. So I think it's really important for everybody to stay safe and try and manage their risk, right? So we're going to go into the week with Monday being maybe a bit of a slow chop, depending if we have any news coming out from the Scottish independence vote. So that's the really big thing, is that you've got a lot of unknowns with all the headline risk coming on in terms of other polls coming out or whatever may happen until Thursday on the 18th, when we actually have the final decision, right? On Tuesday, we've got BOJ, we've got crude on the wires, we've got stuff out of Australia, we've got the ZEW out of Europe, and there's a lot, and we got the basically BOC on the wires too. So there's really a lot of headline risk across the board. Even if we go into Wednesday, we've got claimage count out of the UK, MPC asset purchase facility votes with the bank rate votes. We've got some more stuff out of the US in terms of core CPIs, and we have the FOMC, right? So keep in mind that this week the FOMC also has a press conference, so that clearly has a lot more potential for moves as to oppose when we have just the release without the press conference. And then we're going into Thursday. Thursday, we're going to have the BOJ on the wires again. We got the SMB on the wires. We got retail sales out of the UK. We got unemployment claims out of the US. We got Yellen speaking. We got Philly Fed. And we have the Scottish independence vote, and then on Friday, we got some stuff out of it. So basically, keep in mind that there is a lot of event risk. So I was also, to a certain extent, I was hesitating whether it was worth doing a review this week, because I think the underlying theme, what you have to keep in mind is that, if something, the market's trying to price in something that's never happened in terms of Scotland. So, if you get things that spook the market, if you get a yes vote, depending on what happens on the FOMC, you could really see very big moves. So all the technical outlooks could really just be canceled out. So what I wanted to do is focus a bit on Forex today. In terms of Euro, what's going on in Euro? So we discussed about the fact that we were coming back down. Euro was likely going to stay heavy. That hold, when we start to get weekly closes below the 32.90s, it was likely going to stay heavy for a move all the way back into the 30.90s, and that was going to be the next pivotal level for either a move back into the 32.90s or for a potential move straight all the way back down into the 27.80s, right? So we had this whole zone, those 20.80 50s hold, and now it looks like, essentially unchanged. Last week tried to get some traction to the downside, could not attract any new sellers. So right here, I think everybody's technical analysis is probably going to say that it looks like Euro is ready for a little bounce. And people are going to say, we'll be in the camp of this 50 back holding, that's it, we're going to get back for a measured move long all the way back into the 144s. Some people are saying we're just going to be shaping up for a little squeeze, which will go back into the 32.90s, and then we'll get sold off for the next leg all the way back down. There's a lot of different ways to look at this. So I really think that bottom line is these 27.80s, so you call it 28, are going to be defended to the downside in terms of base support. And unless we get a squeeze that gets traction and we get the weekly closing back above these 132.90s, call it 133, overall, barring any kind of event risk or something happening, technically this is going to stay pressure on for another test of those 28s, to at least for the 28.50s to break. So right here, these two circles, this is actually, let me do it a different way. This is the broader chop zone to expect for the week, bar something, some big event risk, and expect price to be chopping inside this area. And unless we get a weekly close outside this range, so above the high range or below the low range, this is likely going to stay in a wide chop zone until the next, whether it be the FOMC, whether it's Draghi, whatever it may be, the next event that sparks the next move. And most likely, if that's a close above this level, then we'd expect it to try and take an aggressive run to the upside. And if this is a close below this zone, we'd expect it to be the market trying to take an aggressive move to the downside for those next levels. So that's what we'd be looking at. But keep in mind that this week, again, there's a lot of event risk building throughout the week, and it's not going to be about any single event. It's how we close the week, right? It's going to be a crescendo. Now, having said that, if you look at cable, what we discussed was, gaps tend to fill. Gaps will ultimately tend to fill, but they don't have to fill on the same day they form. They don't have to fill on the same week they form. They don't have to fill on the same month, and they don't have to, but they tend to. So right here, what we're seeing is the market catching a bid. If it was going to catch a bid, the most probable place for it to catch a bid was on this weekly here, the confluence of the 100, the 200 on the weekly with the 50 back. So this is extremely pure in terms of bounce technically, right? Now, the tricky thing here, again, is because of the Scottish referendum, this is not a chart that I would be looking to trade 100% technically, right? You have to keep in mind there's a lot of volatility risk, market trying to price in something that's never really happened, so not really priceable in my opinion. So we'll have to see. What I would say is that on this move and on this weekly close, technically, this would look like it has the potential to rally all the way back up into the 50 back of this move from highs to lows. So all the way back into the 166.00s. And that will probably be the next bull bear line to watch, right, from a weekly. So in the same way that we discussed on euro, the fact that it was going to stay likely choppy unless we got a move outside of that range, this is likely going to be the range that we're going to be looking at in cable, right? Unless we get a weekly close above this zone, it's going to be very hard for this to be bull. And if we get a weekly close below this zone, this will likely continue to trade extremely heavy. But keep in mind that inside this range, and it's not a small range, right? It's about a 400, 500 pip range. This could be extremely volatile, right? So for the newer traders, this is really not, no matter what happens into the referendum, it's not a smart idea, at least in my opinion, to try and flip coins or try and catch this, try to catch a falling knife, or try to short something that's skyrocketing, or trying to buy and move up, or trying to sell and move low. Chances are, especially because of the use of leverage, even if you get it right, you'll get stopped out before you get some traction, right? Just be very cautious. Don't try not to be silly, right? And again, I'm not trying to offend anybody, but just trying to manage your risk. Keep in mind that there's a lot of volatility here. And what's important is not any single trade. What's important is going to be, your career as a trader, your long-term track record, not how well you do this week. Apart from yourself, maybe, nobody really cares what you're going to do this week, right? What's important, and you shouldn't really, what's important is what you do throughout 1, 2, 3 years of trading, right? So that's what we're looking at in cable here, but those are really going to be the key zones. Now, in terms of yen, we've been talking about really on USD JPY, the only trade's been really to get long for years for this ultimate breakout. Now, we expected it to globally try and see some sellers coming in into that high end of the range, but it is just breaking up very, very aggressively. And here what we talked about, if you remember, was the move back into the 200 on the monthly, and we're right back there. So now really the focus is how we behave at that trend line. Do we get sold off? Do we get some sellers or not? Most likely this will continue to stay bid. So even if we come back into the trend line, or even should we ever come back into the 105s, I'd expect buyers to emerge there. This is really not something I'd be looking to short unless it's a very tactical trade. This will likely continue to stay bid, but this is the classical trade that in terms of positioning, I don't think there's a lot of edge, because either you're already riding long, or I definitely would not be trying to buy highs. You might be tactically trying to trade the short side intraday, but I clearly would not be trying to build up swing shorts here, right? You know, essentially no point fighting against the BOJ. Now, in terms of technical levels, EJ is a bit more interesting here. We had a nice little base there at the 136.20s for a move back into the 138.90s, 139s we're talking about in these updates too. So that move's done and dusted. So now keep in mind, this is going to be interesting because you see we're coming into this confluence of this ascending trend line, the 200-day, that pivotal level. So if anything, you know, this has a bit more resistance to deal with. You know, if we start catching a bit aggressively, then look, you know, wouldn't be surprised to see price making a quick run for the 142s, 143 zone, you know, back into these previous highs. But, you know, if anything, I think you need to kind of respect this resistance here going into the week, and that'll still be a pivotal level. Now, CAD again, you know, staying very strong. We discussed this was catching a bid. That most recent 50 back came smack back into the 50 back, and this is pointing to ultimately price trying to take a move all the way back into that 100 level and possibly into those 115s. You know, even in terms of shorter term dynamics on this chart, if you're looking on a daily, you can, you know, really not tradable fibs. This is not a chart I would have been trading, but you see here we came back into this 50 back of this zone here, of this top here, 50 back bought, 123 extension. The 161, 150 is looking at a move back into those highs. Again, I don't think it was very tradable. It's not something, not the kind of fib moves. I think they're the kind of fib moves that are nice to put on the chart after they happen and say, oh, well, look at that, that's interesting. Yeah, but I don't think there was something really high odds I would have traded personally. You know, I think there was other setups here. I don't think it was really fibby chart, if you know what I mean. But here, look right now, you know, this base is going to stay the key area, you know, that the longs need to defend. And right here, even if it extends, and I'd expect it will try to extend back into these highs, I really think you need to respect this kind of this resistance, and keep in mind that, you know, price doesn't really move in a straight line, or price has a tendency of not only moving in a straight line. So of course the move in commodities has been very, very harsh, and that's reflected in all the commodity currencies. But keep in mind, whether it's CAD to the upside, whether it's gold to the downside, whether it's Aussie to the downside, it looks like they still have some legs. But keep in mind, price does not only move in one direction, right? So talking about the other commodity currencies, let's look at Kiwi and Aussie. So, you know, in terms of Aussie, very, very aggressive move down. We talked about the fact that we could have made a case for both the long side and the short side as long as we stayed inside these moving averages, the 100 and the 200, and we'd expected to see acceleration if we started to get daily closes outside these levels. So we got that daily close below the 200. Right here we did get a daily close above the 100, and it tried to rally, but it really couldn't get any traction. Right back below all the way through, and here it started to get traction. So this is a bit of a false signal. Again, not something I would have been too interested in getting long. In the same way, not something that I would have shorted here. You know, you know, it was a very aggressive move. There's plenty of short setups, really just not the kind of setups I would trade. But you know, very nice move. So right here, the question going into the week for me really is all about how we behave around the 90 level. Right now in the overnight session Sunday, this broker, you know, FX Pro hasn't opened yet. Aussie's trading 90.05, so you know we've opened down about 20-30 pips or so, and price is really there. So I would say going into the day, going into the Sunday trade and Monday, keep an eye on this 90 level, right? It would be healthy to see some kind of bounce. Most likely this is trying, you know, in the gap down, trying to cause some damage, trying to take out some weak players around the 90. And if it could get traction below there, then it probably trying to accelerate towards the 88.80s, something like that. That's the next big level. We've talked about this level in the past. You know, if we get there, we'll talk about it next week. But, you know, guys have been looking at the recordings, are familiar with that level. We've discussed it a lot in the past. But, you know, here is, you know, if we can't get any traction early in the week below the 90 level, I'd expect to see a healthy little bounce back into the 91.00, possibly all the way back into the 91.60s, and that's going to be the key resistance capping. So you got those 90s to the downside, and then you have that 91.60 to the upside. And in terms of Kiwi, what's going on? You know, also we had this chart, and we said, you know, there's no point there. It's interesting. We're looking to tactically try and trade the long side as long as we're holding up above that 84.00. Once we broke below, we said, there's really no edge trying to get long. And I think we said it in the last update. I think even in these YouTube updates, we said, if anything, gun to the head, once we start to get the daily closes below the 84, you have to sell and move back inside the 84s, stops above the 84.50s, looking for this to continue to the downside, right? And there we go, and back into the next support. So going into the week, again, it would be healthy to see a bounce. What I'm focused on, I'll be focused on like a hawk, is the resistance here. What are we trading now? We're actually trading about 81.47. In the overnight, it pressed all the way down to 81.35s and caught a little bid. So it looks like these 81.20s are being defended. So going into the week, this is the key support, and then I'll be looking to see what happens around those 82.50s. As long as sellers are still selling those 82.50s, expect pressure on. But if we get a little squeeze, tries to get some momentum, then I wouldn't be surprised to see it try to rally back in there, especially depending on what the event risk and what's happening on the week. But pressure's clearly still on. Okay, so a lot of people have written to me asking me to do a bit more Forex, so I tried to focus on the Forex pairs this week. So I hope that was useful. Again, if you like the content, don't be shy about sharing it, retweeting, or whatever. In any case, thanks for listening. Have an awesome rest of your Sunday or weekend, wherever you may be. See you around this week. And again, please keep in mind there's a lot of event risk this week. So stay safe, stay solid, and see you guys soon. Take care. Bye-bye.